Hello, all you market traders and profit takers. This is your Forex University professor at yourforexuniversity.com. We're going to review and maybe give a little lesson or two with our forecast for the end of the week, October 17th, 2014. And we're going to get into this and see what's going on. As usual, I always start out with the odds and work my way across and look at all these pairs. Now, a few weeks ago, I mentioned that we didn't want to lose or go below a particular low. And that's exactly what we're looking at right now. The fact that we have not breached this bottom, this double bottom area here, right? And we've just actually, if you break it down, you'll look at it in a 4-hour chart, you'll see that this is consolidated very heavily. It's just bouncing back and forth. You can even see it in this weekly. If you after you've seen so many charts, you can see certain things. Okay. As a matter of fact, what I'll do is I'll just show it to you on this 4-hour chart real quick. Get over here. This is real tight, but these are the last 2 weeks between this. This is this week. Then this is last week and the week before. Look at the consolidation. We're just going across. I got it kind of tight here. It's a bigger view of it. Just going across, channeling across, as I had said. Now, this is the thing. I want you to always keep in mind. I am not a fortune teller. I read charts, and I know I'm pretty good at it. That's all that is. I'm not saying that I'm a fortune teller, because I can be wrong. As a matter of fact, I'll show you something. I was wrong on, what was that, Wednesday. I was wrong so much that it cost me some money. Okay, right here, Wednesday. 1, 2, 3, 4, 5 out of my 7 trades kicked me in the butt, right? I got one good one off the yen for 109 and another one for 30 off the Canadian dollar, but I still ended up at the end of the day with a negative 84 pips. Why? Because I'm human. I'm the wrong side of the trade. That same thing happened last week. I was on the wrong side of the trade on a few days, Monday and Wednesday and Thursday. Bottom line is, though, last week when I had those, I was able to do well enough on my other trades that I didn't have any deficits at the end of the day. But still, at the end of the week, I'm still 489 pips. But I'm just saying that's market analysis. And as I said last week, you don't hold on to losing trades. You see that my trades have limits to them, that they stopped out. They could have been hundreds of pips of losses on each one of these, but there was a limit put to how much I put at risk. And that's just good technical analysis, good trading. All right, let's get back over here and to the chart, and let's go through this real quickly. So that's it for the Aussie. Like I said, we didn't want to see price break below that low on this GAN level of 86.59. It has not done that yet. It will probably continue to consolidate. I put a little Fibonacci here to create a channel so that you could see the potential support and resistance where it's likely to channel between this 89.90 area and this 85.80 area. And that's where it's most likely to create some channeling. It might even be tighter than that. It might stay between these two GAN levels for a minute. Okay, 86.59 and the 88.99. Let's move on to this euro real quick and see what's going on the weekly. It's a little stronger. We've just broken out past the value area and back into it. Overall, from the weekly chart, you can see that we are still in bearish territory, but when you break it down on the 4-hour chart, which is a fractal movement, and we can see closer into what's going on, you'll see that it looks like the euro over the last couple of weeks has created somewhat of an uptrend. Let me draw some lines here for you so you can see it. Since it bounced off of its lows around here, right? And we've had this chart on our scalp chart, this line right here, and as you can see, it hit it. It looked like it would have gone below into a down. That's here. beautiful, perfect example of something in the system in terms of doing our analysis that it shows that it's not 100%. Right here. Here, this is one of our trend rules, right? We had a breach below the trend line with a close, and then the low was broken or breached. But we moved on to find new highs. Well, there's reason for everything under the sun. And real quickly, I'm going to show you what happened. There was a Fibonacci move right here. And because of the strength of hitting the support level, this really turned out to be the 50% retracement. It hit the 618 first, came back, didn't make it to 618, but made it to the 50 and moved on to a new high. All right. Now, let's get that off of here. If I can get this off of here. Thank you. So now what we do is we just have to go with the flow. There you go, right there. And we got to create a running line because of the strength of this move. You can start here and, oh my, look at what, see? That's a perfect running line right now, just from these first two lows from here and here. Got a perfect running line coming off of this trend line. So this is how we're doing. So in the long run, we're seeing that we are still in bearish territory on the weekly chart. But if you look over on the 4-hour chart, you'll see that things are working its way to the upside fractally. Doesn't mean that it's going to be a straight line to the top. 9 times out of 10, it won't. But we're going to see retracements and all of this kind of thing. But right now, we're looking at, in the shorter term, it's in a bullish territory in the shorter term, and in the longer term, it's in bearish territory. What does this equal? Possible consolidation. End of lesson. Okay, the pound. We're looking at it on a 4-hour chart. That's why it looks so channely. We've got this gray area is a area of support, and this gray is a area of resistance that was created, and we've got a trend line coming down here. Let's put it on a weekly chart, get a little closer. I'm sorry, a little broader. Overall, yes, that's right. We are still in a long-term bearish move. However, we've just hit this value area from the gap last year that took place, filled, rejected this area, and pushed the prices up to end the year, and into this year it just kept going until it reached its point of resistance and has been coming back down, and it is now finally touched for the first time since it left it, okay, that value area, and it rejected it, as you can see right over here with this dragonfly, this hammer doji right here. Here's the area, right, of rejection. So this is a bullish kind of a move, just as on the Aussie, the double bottom is somewhat of a bullish move because it didn't break the low. And even with the euro showing signs of strength. And the Kiwi, which is similar to the Aussie, about the same thing happening with the double bottom and creating consolidation, even though it's still holding itself in that bearish territory on the weekly chart. But like I said, just as with the Aussie, you can see it on the 4-hour chart. You can see the consolidation that's taking place here. The consolidation has more of an upward channel movement going along with it. Kind of like the euro is kind of channeling, it's pushing its way up. So keep in mind what I'm saying here so that you don't lose. Here, look, let's take a look at the Canadian dollar. It's inside of an area right now, but it is still bullish moving forward. It rejected this area right here. This because it's at the top of a range right now. It's reached this. Let's break it down. Let's get a little closer. I'm sorry, a little wider so we can see what we're dealing with. This gray area is a value area that comes all the way back to 2007. Okay, and we pretty much have never, once we got below it, we pretty much stayed below it for 4.5 years until recently, right now, what we're looking at. Okay, between this, because this is a weekly chart, you got to keep in mind everything between the dotted lines is the period. The period on a weekly chart is a year. So this is this year, this is last year, the year before last, and before that. Okay, so that's 1, 2, 3, 4, and about a half. Okay, so we're just now getting back to this price area in this gray. Okay, we kind of fell back below it, hitting the trend line that was coming from this move to the upside, and we're back in it again. We rejected the highs of it temporarily for this week, and we'll see how well we do if we can break past getting up above it into a new area of price. First resistance after that, I would say, is somewhere between around, the first one would be around this area here at 115.90s. The reason why I'm saying that is because I see some highs right here. I'm seeing some lows right here, where I'm looking for where the price had reacted. See where the reactions took place? Let me get a little, I'm gonna have to zoom in a little more so you can see better what I'm seeing. Okay, see it again. See this lows in here, right there. They reacted here. Right here it reacted. Right here it reacted. Okay. Right in here, it's a little higher. That's around the 116.39.40, which is another area here. Right about in here. Yeah, that's it. 118, the low 118s, because I'm looking at low here, the high here, the lows here, and oh man, this is yeah. I'm gonna, man, anyway. If you didn't catch what I did, hey, you got to rewind. You can watch it again. All right. All right. And over here on the Frank, we're over the last few years, we've been in a long and very wide channel movement between these areas here of 89.80s and these highs, somewhere around the 98s, right in here, and 97.80, 90, 97. What's this high here? 98.88. Okay. So we're approaching that same resistance area. We might see things coming back to the downside to correct. It's possible. I'm not saying it's going to happen. I'm just saying it could, because that's where we are. And matter of fact, if you look at it right now, that's what's happening. It is rejecting it with these movements to the downside that it's taking right now in the last 2 weeks. It's been dropping, okay, making correct. We're looking for the correction to take place, possibly with the 382 or the 50 looks real nice. Okay, 91.80s area, or somewhere in this area with the 93, the low 93s for support. And with the Japanese yen, it's beautiful sight. We're back at some topping areas again, just as with the franc. As you can see here, we've gotten we've been coming back for the last 2 years, 3 years. We've been moving back from these all-time lows down here around the 75.50 area. We've made our way back to a point and price that, well, makes us have to question what's going to happen. That's why we have consolidations. This is the setup to create consolidation. But look at the resistance that we're at this 110.26 scan level. We've got support where it reacted and bounced off of it, and after it fell below it, it came back and met it, and look at how badly it rejected it. Again, this is an area where it meandered or near it, and especially here. These were definite. It was all year long. Okay, 1, 2, 3, almost 4, and then on that 5th time it broke through, and that's what was a setup, what they call a wedge. It was a year-long wedge that we had right here like this, and then You got this, right? See the wedge from across, and then the move up. It's classic technical analysis shapes and patterns that on your charts. Okay, so we're there again, is what I'm saying. We're there again, and that's the reason why you're seeing the price at this point reach it and starting to tumble down. All right, but we have this trend line that's coming, and it's not a small or a weak trend line either. We're going to be meeting with, and we also, if we put Fibonacci against it, we can see what? That we're at that 50% retracement. We hit it this week, and we rejected it. We didn't make it all the way back into a bullish candle in terms of the close and the open and the close, but it definitely rejected that area. Okay, so we'll have to keep our eye on that. As far as resistance goes, you really don't want, if you're bearish, you really don't want it to break the highs of the 107.59. Okay, if you want to be a little bit more dangerous, you can just get a little bit above this low from this candle here at the 108. Okay, so between there, 107.60 and 108, that's an extra 40 pips. If you got the money to risk that and that doesn't bother you, go ahead. But if you're bearish, putting in stops. But anyway, from this point, these are all of these charts show signs for setting themselves up to create a consolidation for a period of time that we might find ourselves dealing with. And if so, that's okay, because you can still make money in a channel. Just got to know how to do it. That's all. So, until next week, we're going to be profitable. That's right. If you follow your technical analysis, keep your money management in order, you will be profitable. Until then, I am your Forex University professor here at ForexUniversity.com, hoping all the best in your trading, that you are always profitable.